This is a summary of Part 1 of the Unclaimed Financial Assets Act. Part 1 of the Unclaimed Financial Assets Act, 2011, titled Part 1, Preliminary, lays the groundwork for the Act's application and interpretation. It establishes the Act's short title and provides clear definitions for crucial terms used throughout the legislation. Let's explore the key components. Short title, Section 1. This section succinctly states the Act's title. The Unclaimed Financial Assets Act, 2011. This straightforward naming convention ensures easy reference and clarity. Interpretation, Section 2. This section is vital as it defines important terms used throughout the Act to avoid ambiguity and ensure consistent understanding. Some of the key definitions include: apparent owner refers to the individual named in the holder's records as the rightful owner of the assets. Assets encompasses financial assets covered by the Act, including any associated income, dividends, or interest. Authority refers to the Unclaimed Financial Assets Authority established under Section 39 of the Act. Holder denotes any entity entrusted with assets on behalf of an owner, possessing assets belonging to another, indebted to another, or acting as a trustee for specific assets. Unclaimed assets refers to assets presumed abandoned based on the Act's provisions, transferred to the authority as unclaimed, or legally recognized as unclaimed under other laws. This definition also includes income, dividends, or interest earned on these assets, but excludes any lawful charges associated with them. These clearly defined terms establish a common language and framework for understanding and implementing the Act's provisions in managing unclaimed financial assets. This is a summary of Part 2 of the Unclaimed Financial Assets Act. Part 2 of the Unclaimed Financial Assets Act, 2011, titled Part 2, Determination of Unclaimed Assets, outlines the specific types of financial assets covered by the Act and the conditions under which they are considered abandoned and become subject to the custody of the Unclaimed Financial Assets Authority. General Requirements for Unclaimed Assets, Section 3. This section lays out the general criteria for assets to be considered unclaimed, supplementing the specific conditions outlined in later sections. For assets to fall under the authority's custody, one or more of the following conditions must be met in addition to meeting the criteria for presumed abandonment. Unknown identity. The holder's records lack information about the asset owner's identity. Lack of payment or delivery. The holder has not previously paid or delivered the assets to the apparent owner or rightful recipient. Foreign address and non-applicable escheat laws. The apparent owner's last known address is in a country that either does not have laws for the transfer of abandoned assets to the state, escheat laws, or has escheat laws that don't apply to those specific assets, and the holder is domiciled in Kenya. Specific categories of unclaimed assets, Sections 4 to 17. The Act meticulously lists various financial instruments and situations that can lead to assets being classified as unclaimed. Each category has a specific timeframe after which the assets are presumed abandoned, assuming no action from the owner. Traveler's checks, money orders, Section 4. Sums payable on traveler's checks and money orders become presumed abandoned if unclaimed for over 2 years after issuance. However, this doesn't apply if the owner has communicated with the issuer or shown interest within that time frame. Checks and similar instruments, Section 5. Similar to the previous category, any sum on a check, draft, or similar instrument, like a banker's check, held by a bank or financial institution is presumed abandoned after 2 years from the payable date, or 2 years after issuance for on-demand instruments, unless the owner interacts with the institution. Deposits, Section 6. Demand savings, and matured time deposits, including automatically renewable deposits, are presumed abandoned after 5 years of inactivity. The Act defines activity as increasing or decreasing the amount, presenting documentation for interest credit, or communicating with the bank. Interestingly, having another active relationship with the bank doesn't exempt the potentially abandoned account unless there's communication regarding the specific asset in question. Insurance policies and annuities, Section 7. Funds from matured or terminated life or endowment insurance policies and annuity contracts are presumed abandoned if unclaimed for over 2 years after becoming due. The Act also clarifies situations where a policy is considered matured even without proof of death, such as when the insured reaches the maximum age on the mortality table. Demutualization of insurance companies, Section 8. When an insurance company transitions from a mutual to a stock company, demutualization, distributable assets like funds or stock are presumed abandoned after 2 years if unclaimed. Utility deposits, Section 9. Deposits made to utility companies for services become presumed abandoned after 2 years from the service termination date. Court-ordered refunds, Section 10. Any court-ordered refund that remains unclaimed for over 2 years after it becomes payable is considered abandoned, regardless of whether the court order mandated a claim submission. Ownership interest in business entities, Section 11. Any stock, share, or intangible ownership stake in a business is presumed abandoned if the owner hasn't claimed dividends or interacted with the entity regarding their interest for over 3 years. Assets from dissolved businesses, Section 12. Assets awaiting distribution during the dissolution of a business are presumed abandoned after 2 years from the specified final distribution date. Assets held in fiduciary capacity, Section 13. Assets managed by a fiduciary, e.g., a trustee, for another person are presumed abandoned if there's no activity or communication from the owner for 2 years after they become payable or distributable. Gift certificates and credit memos, Section 14. These are considered abandoned if unclaimed for 5 years after issuance or if partially used and then inactive for 5 consecutive years. Importantly, the Act excludes gift certificates for retail goods and services from this definition. Unpaid wages, Section 15. Unpaid wages, including uncashed payroll checks, allowances, bonuses, and terminal benefits are presumed abandoned after just 1 year of being payable. Safe deposit box contents, Section 16. Assets held in safe deposit boxes are presumed abandoned after 2 years from the expiration of the lease or rental agreement. Assets held by courts or government departments, Section 17. This category includes assets held by these entities for an owner and deemed abandoned after 1 year of becoming payable or distributable. Cabinet Secretary's authority to expand categories, Section 18. The Act grants the Cabinet Secretary the authority to designate additional asset classes and holders subject to the Act's provisions. This ensures the law remains adaptable to new financial products and evolving market practices. By clearly defining what constitutes unclaimed assets and under which specific conditions they fall under the Act's jurisdiction, Part 2 provides a robust framework for identifying and managing these assets in a systematic and transparent way. The inclusion of specific timeframes for each category adds a layer of legal certainty for both holders and potential claimants. This is a summary of Part 3 of the Unclaimed Financial Assets Act. Part 3 of the Unclaimed Financial Assets Act, 2011, titled Part 3, Dealing with Unclaimed Assets, Duties of Holders and Certain Powers of the Authority, etc., outlines the procedures for handling assets that have been classified as unclaimed or potentially unclaimed. This part details the responsibilities of both the holders of these assets and the Unclaimed Financial Assets Authority, ensuring a structured approach to managing and potentially reuniting these assets with their rightful owners. Holders' duties. Duty to locate and notify, Sections 19 and 35. The Act places a clear obligation on holders to make reasonable efforts to find and notify owners of assets that fall under the Act's purview. This includes sending written notice to the apparent owner at their last known address within a specific timeframe between 60 days and 1 year before submitting the report to the authority. Reporting presumed abandoned assets, Section 20. Holders are required to file a detailed report with the authority for all assets presumed abandoned. This report must be certified by a high-ranking official of the holding entity, typically the Chief Executive Officer. The report should include owner information, the apparent owner's name, last known address, and any other identifying information. Insurance-specific details. For insurance policies, the insured's and beneficiaries' details are required. Tangible asset descriptions. If the assets include tangible items, a clear description and their storage location must be provided. Asset details. Nature, the identification number, if applicable, description, and the amount due. Transaction history. Dates when the asset became payable and the last recorded interaction with the owner. Additional information. The authority may request further details as needed. Providing information to the authority, Section 21. The authority has the right to request information from any entity suspected of holding unclaimed assets, even if they haven't filed a report. Timely payment or delivery of assets, Sections 22 and 65. When a report is filed, the holder must simultaneously transfer the abandoned assets or any outstanding balance to the authority. Record maintenance, Sections 32 and 64. Holders are required to maintain records of all assets subject to the Act, including the owner's name and last known address, for a minimum of 10 years. This duration can be shorter if specified by the Act or the authority. Authorities' powers and responsibilities. Custody and safekeeping, Section 23. Once assets are transferred to the authority, it assumes responsibility for their safekeeping and management. Importantly, holders acting in good faith are relieved of any liability once the transfer is complete. The Act provides a definition for good faith in this context. Deductions for costs, Sections 24 and 52. The authority is permitted to deduct expenses related to the management and sale of abandoned assets, including administrative costs, publication fees, and service charges, ensuring the fund's sustainability. However, these deductions are subject to limitations to prevent excessive charges. Management and sale of assets, Sections 25 and 26. The authority is responsible for managing the assets it receives. If necessary, assets, excluding money, can be liquidated or converted into cash. Typically, the authority aims to sell assets within 3 years of receiving them through a public auction process, following proper notification procedures. The Act outlines specific rules for selling different types of assets, such as securities, to ensure transparency. Public access to information, Section 27. To facilitate claims and promote transparency, the authority is required to make certain information about unclaimed assets public. This typically includes the apparent owner's name and a general description of the assets, balancing transparency with owner privacy. Claim processing and payment, Sections 28 and 45. The Act establishes a clear procedure for individuals to claim their assets. The authority has 90 days to review each claim and notify the claimant of its decision. If the claim is successful, the authority will release the assets or the proceeds from their sale to the rightful owner. Legal action and dispute resolution, Sections 29 and 50. The Act recognizes that disputes may arise and provides legal recourse for both holders and claimants. Claimants dissatisfied with the authority's decision or experiencing delays can pursue legal action. Similarly, the authority has the power to initiate legal proceedings to ensure compliance with the Act. Examination of records, Section 31. The authority has the power to examine the records of any entity suspected of holding unclaimed assets, even without prior notice, to ensure compliance with reporting and payment obligations. They can also contract external parties to conduct these examinations. If discrepancies are found, the holder may be charged for the examination costs. Unclaimed Asset Database, Section 36. To centralize information and make it accessible, the authority is required to maintain a comprehensive database of all unclaimed assets under its purview. This database is accessible to the public, subject to privacy safeguards for asset owners. Collaboration and Enforcement, Sections 37 and 51. The Act emphasizes collaboration between the authority and other regulatory bodies responsible for supervising holders to effectively enforce the Act's provisions. The Act also clarifies that its provisions supersede any conflicting laws related to unclaimed assets. The authority is granted the right to access information held by public bodies to assist in locating asset owners. Public bodies are also expected to adhere to record-keeping standards set by the Act. Part 3 of the Unclaimed Financial Assets Act is critical in putting the Act's objectives into action. It sets out a framework for a collaborative approach between holders, the authority, and the public to ensure the proper management of unclaimed assets. The detailed procedures and timelines outlined in this part promote transparency, accountability, and the protection of the rights of both asset holders and potential claimants. This is a summary of Part 4 of the Unclaimed Financial Assets Act. Part 4 of the Kenyan Unclaimed Financial Assets Act, 2011, focuses on the establishment and operation of the Unclaimed Financial Assets Authority. This part outlines the authority's structure, responsibilities, and powers in managing unclaimed financial assets. Establishment and composition, Sections 39 and 40. The Act establishes the Unclaimed Financial Assets Authority as a body corporate with perpetual succession. The authority is governed by a board comprising individuals with expertise in areas relevant to the Act's objectives, ensuring informed decision-making. The board is composed of appointed members, 5. These members are selected by the Cabinet Secretary for their expertise in banking and investment, insurance, accounting and auditing, law, and consumer interests. Their inclusion ensures the board has diverse perspectives and expertise. Ex officio members, 2. The Permanent Secretary to the Treasury and the Chief Executive Officer of the authority are also members of the board. Their inclusion ensures government representation and operational continuity. The Act also details the board's operational procedures, including the election of a chairperson, meeting quorums, and decision-making processes, emphasizing transparency and accountability in the authority's governance. Roles and responsibilities, Sections 41 and 42. The Unclaimed Financial Assets Authority is tasked with implementing the Act's objectives effectively. Its primary roles include enforcement and administration. The authority is responsible for enforcing the Act's provisions and ensuring compliance by all entities. This broad mandate underscores the authority's central role in achieving the Act's aims. Trustee of the Fund. The authority serves as the trustee of the Unclaimed Financial Assets Trust Fund, managing its assets and ensuring their proper utilization. This role highlights the fiduciary responsibility entrusted to the authority. Receiving and disbursing funds. The authority manages the flow of unclaimed assets, receiving payments from holders and disbursing funds to verified owners. This responsibility necessitates robust systems for receiving, verifying, and disbursing funds. Investment management. The authority invests the fund's assets prudently to ensure their growth and sustainability. Policy advice. The authority advises the Cabinet Secretary on national policies related to unclaimed assets, contributing its expertise to policy development. Appointment of key personnel, Section 42. The Act outlines the appointment process for the authority's chief executive officer, who is responsible for the authority's day-to-day operations and reports to the board. Additionally, the board is empowered to appoint other necessary staff to ensure the authority's effective functioning. Exemption from stamp duty, Section 43. To streamline operations and minimize financial burdens, the Act exempts the authority from paying stamp duty on instruments related to its functions. This provision underlines the legislative intent to support the authority's operations. Part 4 of the Act provides the legal and structural framework for the Unclaimed Financial Assets Authority, outlining its composition, functions, and powers. By establishing a dedicated body with relevant expertise, the Act aims to ensure the efficient and effective management of unclaimed assets, ultimately seeking to reunite these assets with their rightful owners while safeguarding their value. This is a summary of Part 5 of the Unclaimed Financial Assets Act. Part 5 of the Kenyan Unclaimed Financial Assets Act, 2011, titled the Unclaimed Financial Assets Trust Fund, establishes the framework for the management and operation of the fund dedicated to holding and disbursing unclaimed financial assets. Fund Establishment and Payments, Section 44. This section establishes the Unclaimed Financial Assets Trust Fund, overseen by the Unclaimed Financial Assets Authority. The fund receives all unclaimed assets, ensuring their centralized management. The Act mandates that all monies categorized as unclaimed assets be deposited into the fund. Additionally, any other payments required by the Act or other relevant laws must also be directed to the fund. This includes payments to owners. Money from the fund is used to pay verified owners of unclaimed assets, ensuring their rightful claims are honored. Administrative costs. The fund can cover expenses related to the authority's operations, ensuring its sustainability and capacity to fulfill its mandate. Claim payment and interest, Sections 45 and 86. The Act outlines the process for paying claims from the fund. Upon verifying ownership, the authority disburses an amount equal to the value of the assets or a portion thereof. While owners receive the principal amount of their unclaimed assets, the Act clarifies that no interest accrues on these assets once they are classified as unclaimed and transferred to the authority. This means that owners will receive the value of their assets as they were at the time of transfer to the authority, without any additional interest payments for the period they were held as unclaimed. Accounting, Audit, and Reporting, Sections 46 and 87. The Act emphasizes transparency and accountability in managing the fund. The authority is mandated to maintain accurate financial records and provide regular financial statements, including a balance sheet and income and expenditure statement, to the Auditor General or a designated auditor. This ensures independent scrutiny of the fund's financial management. Once audited, the Act requires the publication of the fund's accounts in the Official Gazette and at least 2 national newspapers, ensuring public access to information about the fund's financial status. Penalties and Recovery, Sections 47 and 90. The Act provides for penalties for offenses related to unclaimed assets, ensuring compliance and deterring potential violations. Courts can impose fines on individuals convicted of offenses, with these sums paid into the fund. Importantly, any amounts due to the fund are recoverable as debts owed to the authority. These debts are categorized as civil debts and are recoverable through a streamlined legal process, strengthening the authority's ability to recover funds. Investment of funds, Section 48. The Act recognizes the importance of preserving and growing the value of unclaimed assets held in the fund. The authority is authorized to invest any funds not immediately required for disbursements, subject to approval from the Cabinet Secretary. These investments must adhere to the Trustee Act Cap 167, which governs trust fund investments in Kenya, ensuring prudent and legal investment decisions. All investment proceeds are reinvested into the fund, contributing to its long-term sustainability. Part 5 of the Act establishes a robust framework for managing unclaimed financial assets through the Unclaimed Financial Assets Trust Fund. The emphasis on accountability, transparency, and prudent financial management aims to ensure the security and proper utilization of these assets for the benefit of their rightful owners. This is a summary of Part 6 of the Unclaimed Financial Assets Act. Part 6 of the Kenyan Unclaimed Financial Assets Act, 2011, titled Miscellaneous, addresses a range of provisions designed to support the effective implementation and enforcement of the Act. Appointment of Agents, Section 49. Recognizing the need for operational flexibility and specialized expertise, the Act empowers the authority to appoint agents and service providers to assist in carrying out its mandate. This includes engaging custodians to safeguard assets, fund managers to invest fund resources, and reunification agents to help reunite owners with their unclaimed assets. This provision ensures the authority can access specialized services to fulfill its responsibilities effectively. Legal Proceedings, Section 50. The Act clarifies the authority's legal standing, granting it the power to initiate both criminal and civil proceedings related to unclaimed assets. This ensures the authority has the legal means to enforce compliance with the Act and pursue cases of potential fraud or non-compliance. Additionally, designated officers authorized by the board can represent the authority in court, streamlining legal actions. Authorities' right of entry and information access, Sections 51 and 93. To ensure compliance and facilitate the recovery of unclaimed assets, the Act grants the authority the right to enter premises for inspection purposes, subject to reasonable notice. This provision allows the authority to verify compliance with the Act and examine records related to potentially unclaimed assets. Furthermore, institutions subject to the Act are obligated to provide the authority with requested information and documents, strengthening its ability to enforce compliance and locate unclaimed assets. Offenses and Penalties, Sections 52, 94, 95, and 96. To deter non-compliance, the Act outlines specific offenses and corresponding penalties. Failing to maintain required records, providing false or misleading information, or refusing to transfer unclaimed assets to the authority are all considered offenses. This highlights the seriousness of complying with the Act's provisions. Penalties for these offenses include substantial fines and potential imprisonment, underscoring the importance of accurate reporting and cooperation with the authority. Regulations, Section 53. The Act grants the Cabinet Secretary the authority to formulate and issue regulations, upon recommendation from the Board, to ensure the Act's smooth implementation. This provision allows for the development of detailed rules and procedures to address specific aspects of managing unclaimed assets, ensuring clarity and consistency in the Act's application. Part 6 of the Act functions as a comprehensive framework, addressing various operational and enforcement aspects crucial for the Act's effectiveness. By encompassing provisions related to agent appointments, legal actions, information access, penalties, and regulations, Part 6 bolsters the authority's capacity to manage unclaimed assets transparently, efficiently, and in a manner that safeguards the interests of both the owners and the public.